Hey there, it's Les Solgrove. This is Simply Des Moines Market Values, week 47. My gosh, Thanksgiving's coming up this week, so we're going to talk about the week before Thanksgiving market stats, and it's all about the butterfly effect. Let's see what happens here in this show. So there was a TV show on the other day that I flipped past. It was The Butterfly Effect with Ashton Kutcher. I think it was out in 2003, 2004, something like that. And it didn't I didn't watch it, but it gave me the idea that, hey, the idea that of the butterfly effect is that small things happen and they change everything down the line. And so we're going to talk a little bit about that this week and how it can maybe relate to the real estate industry. And so the butterfly effect is based on this notion that everything is totally connected, interconnected. And I think in the movie it was, a butterfly can fly and the wings causing a little bit of wind motion can cause maybe a hurricane down the road. I mean, it's just the complex system and things like that. But effectively in real estate, whatever we do affects everything and everybody else in the tiniest way. And how many times have you been working with a buyer or seller and you say, you know what? Everything happens for a reason. This happened for a reason. The offer didn't go right, or something didn't go right, and you go, okay, to justify it, it all happened for a reason, and that's kind of the process we're going to take a look at today. So we're going to start off with this graphic showing you pending sales. This is the traditional trend line, and this is the pending sales that are accepted, pending offers accepted weekly. And so the dashed traditional line there that I have overlaid on there is kind of how the pending sales occur. We see most of our pending sale activity in the first 3, 4, maybe 5 months of the year, and then it trails off. And what you can see in this particular example is that as we got into September and October and November, our pending sales, pending offers accepted have increased over the norm. And so that all happened for a reason. And part of that reason is the mortgage interest rates. And so when we take away the trend line and add the weekly mortgage rates line there, you can see that as we start the year off here, mortgage interest rates in March tended to dip a little bit, and that was a perfect time because it helped bring home buyers that were considering making an offer into the market, and many of them actually did make offers, and we saw an increase in pending sales. This is pretty typical. I would say that spring market's going to be spring market. But as we got near the middle and the end of the year, you can see that as rates kind of leveled off a little bit, so did the weekly pending offers accepted. They didn't go down, they didn't go up, but they kind of weekly leveled off a little bit. As we got into August and into September, that's when the mortgage interest rates really started to drop dramatically, and that's where then we saw quite a change. What we would typically see, if you remember that graphic before, where the trend line was below, you can see what we're seeing is that we saw pending offers accepted increase as we went into that period. And then now, as we've gotten into the month of November with interest rates back up close to that 7% rate again, you can see that the pending offers, weekly pending offers, have slowed down. They haven't completely died off. I think there's still some optimism out there, but interest rates kind of have a lingering effect, and I think a lot of buyers out there kind of were taking advantage of making those offers when interest rates were down, thinking this might be their best chance, and it probably was. If you think about the fall market, it's a great time of year to be making an offer because there's fewer buyers out there to compete against. And so we don't know what interest rates are going to do. So maybe they were smart in that process. I would say they were. So if we look at this same interest rate trending overlaid over the weekly new listings added, you can kind of see that same trending. As mortgage interest rates kind of dipped a little bit in the spring market here, we started to see an increase in listing inventory. And then as we got into the second half of the year here, there was a nice jump right after the 4th of July of inventory coming on a weekly basis. But you can see that again, as the interest rates started to drop in August and September, the number of homes coming on the market skyrocketed compared to what we would normally see. And that trend follows the pending trends down as well. So we would normally see the number of homes added to the market be much less as we moved into the fall. Um, but we've seen that benefit there. And so that's what's kind of helped us increase our year-to-date closed sales, which we're going to talk about in a minute here. But one more interest rate graphic here, we're going to show you that I just don't feel like the Federal Reserve, everybody kind of says, well, let's see if the Federal Reserve drops the prime lending rate for the banks, if that'll help mortgage rates. Well, here's a prime example of as the uh, Federal Reserve rate dropped. It dropped a 0.5% in September, and again, just here about a week ago, it dropped down another 0.25%. It's currently sitting at 4.75% that the banks are using to borrow money from, and they are not basically giving us that same discount. I think there's still a lot of concern in the economy. The election's over, but there's still some economic concerns. And so you can see now that we've seen really since the 1st of October, we've seen interest rates rise almost up to that 7% rate again. So I think that's going to affect what happens throughout the rest of this year. One of the side effects, and maybe this butterfly effect you can talk about here, is the number of homes that are coming off the market temporarily. These are voluntarily sellers voluntarily taking their homes off the market, maybe for the holidays, maybe not. But you can see that this has been a pretty strong trend as we've gone through this year versus last year. The little dash line shows where we were last year. As we hit the fall market here, especially from about week 42 on, we've seen more home sellers temporarily taking their homes off the market, whether they're going to bring them back on and after Christmas or just what they're doing. They feel like maybe they've given their home the opportunity to come on the market, and their intent is to put it back on when the conditions are maybe a little bit more favorable. Now, if we look at the weekly canceled listings, these are home sellers that have effectively given up on the marketplace and either switched agents, for example, that would be a canceled listing, or they've completely came off the market. And really, from about week 42 was where that spike hit, and that coincides with the beginning of the rise of mortgage interest rates. So, coincidence or not, I think that this tells the story that mortgage interest rates probably had a large factor to play in that the decision of home sellers to take their homes basically off the market. There was a couple of times here earlier this year we saw that same thing happen, but consistently the last 6 weeks here, we've seen the number of canceled listings come off quite a bit. Now, don't get too concerned about week 47, why it was so low, or why there's such a discrepancy between this time last year. If you remember last year, Thanksgiving was a week early. So this number here would have represented Thanksgiving week last year, where Thanksgiving week is going to be right here this year. So that's kind of an anomaly. You don't get too hung up on that. As far as pricing goes, again, you would wonder, well, gee, our home prices are holding out very, very well. Well, keep in mind, the closed sales that we're seeing now are coming from that September and October sales, when those mortgage rates were lower and then starting to rise. And so naturally, home buyers out there were taking their opportunity to buy those homes at the lower discounted rates, and that would give them more buying power, which will in turn allow them to spend more. And that's what we're seeing here. Is we're seeing a higher median sale price right now. We'll probably see that another week, maybe two, and then it'll drop back off. You can see that the tradition is that it does kind of level off as we get near the end of the year. But I think this year, because of that spike in mortgage interest rates, where when it was so low and then started to go up, that spurred a lot of activity. So I think we'll see this drop back down closer to that $285,000 median sale price by the end of the year. It's still going to be above last year. I think that's a given. As far as the pace of the weekly closed sales, we did surpass. Just look at this little guy right here. Week 47, we actually closed more sales this week than we did from last year. Again, this is that Thanksgiving number there from a week or from a year ago. So really not a big surprise. because if you look at the trend here, we're still running right around that 150 to 200 closed sales per week number here. So the pace is effectively slowing, even though it may look like it's starting to pick up a little bit. That's just because we're looking at last year's Thanksgiving being a week earlier. The one thing that also you're going to look at and see this week is that we are now in a positive number compared to last year's closed sales. In other words, we're making up the pace, but it is absolutely, as it marks down there at the bottom, temporary. It's a temporary closings are happening ahead of last year, based only on the fact that we've got that surge from that September, October sales pace there. So the question is are we still on track to close more sales than last year? If you remember last week, I gave my predictions and I said we're not going to hit last year, and I'm going to hold to that. I don't think we're going to close 13,243 or more closed sales by December 31st. We're currently only 1,224 away, sitting at 12,019 home sales. In fact, this shows you how many days it took to close that gap from 11,000 to 12,000. It took us 23 days compared to 34 last year. So the pace is much faster, and that's why we're seeing that number higher this past week. However, here's the kicker. We only have 1,664 homes that are currently in sale pending process total. This is the number of homes we have that are waiting to close, 1664. And for us to hit 13,243, we need, three-fourths of those sales to close before the end of the year. And because really probably it's going to be unlikely that many of the homes that go under contract from this point forward are actually going to close in 2024. They're all probably going to start to be closing in 2025 with a 4 to 6 week closing period. Now, that doesn't mean not all of them. Some will actually close yet this year that are going under contract this next week, but it's going to be few and far between. So it's going to be really, really hard to believe that we're going to get 2/3 of or 3/4 of this current pending sale contract numbers to actually close by by the end of the year. So anyway, that is the show this week. As everybody's kind of focusing on Thanksgiving, and so I'm going to say thank you so much for tuning in as you always do every week. Please share the content if you find it's valuable. Hit that share button, the subscribe button. I really, really, really am asking everybody to hit that subscribe button. What that does for you is it just sends you this information automatically. You don't have to come hunting for it every week. And hitting that like button also helps me know that I'm doing a good job out there, and would appreciate you to do that with me. So anyway, have a fun Thanksgiving. Enjoy your family time. Travel safe, and we'll see you all again next weekend. And talk to you soon. Be careful out there.